What's up, friends? Today we're talking about FHA loans and whether or not they're in your best interest if you're thinking about buying a home in 2022. But before we jump into any of that, a little bit of house cleaning. I'm Chris Nelson with Genstone Realty, the team lead at the Nelson Home Group, and this channel is all about real estate advice, tips, and tech. So if any of that excites you, you're in the right place, but do me a favor, drop me a comment, hit that thumbs up, consider subscribing, and mash that bell so that you're notified of my future content. So as I mentioned, if you're thinking about buying a home in 2022 and you're thinking about using an FHA loan, well then this video is for you because I want to talk a little bit about whether or not it will play against you or potentially could play against you in this rapidly moving market that we're seeing. Now, first you have to understand what an FHA mortgage is. An FHA mortgage is a mortgage that's backed by the Federal Housing Administration. It's basically a governmental loan. And what it says is that the investor or lending institution that gives you the money, in the event you were to default and your home were to go into foreclosure, the government is basically going to make good on your debt and make that investor or that lending institution whole. So it's basically a security blanket for an investor that's looking to be in the FHA space. But how does that impact you? You have to think about or put your feet in the shoes of a seller and think about how they review offers. And if they're reviewing an offer that is contingent upon FHA financing, a lot of the times they may look at it as the borrower may not be that strong of a borrower. And the reason for that is it's known that FHA does have relaxed guidelines. And one of those relaxed guidelines is a lower credit score. With FHA, it is possible for some borrowers, not all, but for some borrowers to actually become approved with a 580 credit score. Now, we usually seek approvals closer to a 640 credit score, but again, it is possible for a borrower to get FHA financing with a 580 credit score. The other thing is that it doesn't require a lot of money out of pocket. An FHA loan only requires the borrower to put down 3.5%. Now again, none of this ultimately is a bad thing for a borrower, but if you're a seller and you have the opportunity to pick from multiple offers, which is probably what we're going to see again in 2022, it's important to understand that a seller is going to consider some of those factors. But does that mean you shouldn't apply for an FHA loan? Absolutely not. If an FHA loan is what fits your financial lifestyle or your lifestyle in general, and that's what's going to get you out there as a buyer, by all means, put the application in and get out there and try to find a home with your FHA loan. As a matter of fact, if we look at the numbers from 2021, using the city of Philadelphia, there were roughly 16,000 transactions in the city of Philadelphia throughout 2021. And 57% of those sales had a conventional loan, and roughly 17% of them closed with an FHA loan. So you can see there is a pretty significant variance when it comes to transactions that are selling with a conventional loan versus an FHA loan. Now, the other sales were either cash or some type of creative financing. But if we take a step back and we look at the real estate market prior to the pandemic, the market or the numbers were somewhat similar. As a matter of fact, in 2019, we had closer to 17,000 sales in the city of Philadelphia, but roughly 50% of those sales were conventional and 15% were FHA. So again, although the numbers are skewed a little bit, it's very similar. And at the end of the day, the pandemic did not push the FHA buyer out. Just the fact that we're in this crazy seller's market is really what's giving them a disadvantage, because sellers are looking at multiple offer situations and a lot of them are getting conventional offers. So if you are applying for a mortgage and you have the option to get a conventional loan, although it may require a little bit more money down, it's going to potentially make you look a little bit stronger to the seller. And as a matter of fact, if you have really decent credit, there are conventional loans out there that require a 3% down. But again, those loans will require a little bit stronger of a credit score. There are a few other moving mechanics to be aware of or consider when it comes to an FHA loan and why it may play against you, because these are things that a seller is going to think about. And the biggest thing that a seller is going to think about or have some reservations about is the FHA appraisal. If you have a conventional loan, you actually can pay the seller for more than the property appraised for. So if you're buying a home at $300,000 and you have a conventional loan and it appraises for $280,000, you have the option to either negotiate with the seller or give them the $20,000 difference so that they're still getting the $300,000. But if you're an FHA buyer, the language in the agreement of sale is very clear in that a buyer cannot pay a dollar more, a cent more. They cannot pay any more than the appraised value. So in this situation, if you're buying a home for $300,000 and the FHA appraisal comes in at $280,000, at the end of the day, no matter what you arrange, the seller has to either do one of two things: release you from the agreement of sale and give you your money back, or take that $20,000 loss and move forward with the sale price of $280,000. Again, as a seller, having that ability to negotiate in a market like this goes a long way. The other thing to consider is that the FHA appraisal could also stem repairs that will need to be fixed prior to settlement. Some buyers will say, we'll go ahead and do those repairs at our expense, but me personally, I see some liability with that, because in the event settlement doesn't happen, that borrower just improved a home that they don't own, and that could be an argument in itself. But these repairs that the appraiser comes up with are repairs that have to be done. So even if the FHA buyer says to you, Mr., Mrs. Seller, here's my offer and I'm not going to do a home inspection, and you're thinking that you're off the hook when it comes to repairs, again, this FHA appraisal could play against you in the fact that it could stem some repairs. The other thing to consider when it comes to FHA, especially in this market where we're seeing a lot of homes be rehabbed and resold, is that FHA has what's referred to as an anti-flip guideline. And what that guideline says is that any property that is purchased and potentially resold within a 90-day time frame is automatically disqualified from the FHA process. And any property that was bought and potentially resold between 91 and 180 days is actually subject to a second FHA appraisal. And the FHA appraisal cannot be at the expense of the buyer. So either the seller or the realtor or someone else involved in the transaction has to foot the bill for that second appraisal. And those appraisals obviously could come in at different numbers. One might stem one set of repairs, another might stem a second set of repairs. So it very well could be a messy situation if you're attempting to buy a property that was flipped and was owned for less than 180 days. And the last thing to consider or think about is the timing. FHA loans do take a little bit more time to get from the start to the finish line. Some of that has to do with the appraisal, and some of it has to do with the way an FHA loan is underwritten. But these are all things that a seller is going to consider if you're coming to the plate with an offer that's contingent upon FHA financing. So the key takeaway, in my opinion, is that FHA is still very much a phenomenal product and a great way to obtain home ownership. And if we look at the numbers, roughly 15% of sales in 2019 were FHA, and 17% were FHA in 2021. So if anything, we're seeing a stronger market for FHA sales, but just understand that a seller may look at it and see some of these things that theoretically could play against you. But FHA is still a phenomenal product, and don't let that keep you from not applying. So again, with all that said, I'm Chris Nelson with Genstone Realty. I hope this information was of value to you. Let me know your thoughts about FHA. Are you buying a home this year or thinking about buying a home? Is FHA the product that you're thinking about? If so, whatever the situation may be, let me know. With all that said, check in next week for the very next Just the Tip with Chris. Until then, take care.